Hey everyone, hope you're having a good day. The channel's finding value. Today we're gonna go through Twitter, see what people are sharing on social media. I, I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in, take a look, see what people are sharing. If you want to follow me at @finance, and if you want to join our community, finding-value.com. That's where I dive deeper into investment opportunities. Share that with the community. I answer a lot of questions about investing, portfolio allocation, strategies, macro environment, yield curve questions, questions about individual companies, the technical analysis on those companies, et cetera, et cetera. So I'm here for you guys. We've got a community that supports each other for this commodity bull market. And we're talking a lot about commodities just because that's what's undervalued. We still have, and this will be one of the last days for that special coupon code. It is special. That is the discount coupon code where you can get a little bit more savings. So Eric Nuttall says today, redefine what Happy New Year means. We have record high oil demand, record low global inventories, tightly held OPEC spare capacity, a sector trading at 12% free cash flow yield at spot, and now the real potential for the elimination of the Canadian political risk discount in Canadian stocks as Trudeau has resigned. Now look at the global observable oil inventories onshore and oil on water. Look where we're located. What the heck? I mean, this is really low in terms of oil inventory. Look at 2020. 2020, this was like a Texas away. This is way up there. 2024 had a pretty good year of drawing down inventory, but look at 2025. We are continuing to eat through our inventory levels. And OPEC, I think, Saudi Arabia specifically, I think they want oil prices to go to 90, 95 before they turn on the taps a little bit. So it's like OPEC versus the oil speculators. The oil speculators are saying, "Oh, well, we've got, capacity. Doesn't matter what the inventory is." And OPEC's like, "You're not going to get any more capacity until you get the price of oil." I don't know who's going to win here, but that's kind of the standoff that I see happening. Here's bullish trend, point and figure chart on tourmaline. The point and figure chart points to an ascending triple top breakout. So think of these as the breakout through here. One top, two top, and a third. And we are breaking out potentially here. And we could run up to $86 from $69.20 in tourmaline. Tourmaline is a Canadian company that does natural gas. Does pay a good dividend. But keep in mind, too, when we break out of these things, sometimes you get a retest. May pull back and do a retest on top of the chart. That doesn't mean it is reversing it. It's a bullish configuration. So this is VBL's opinion. He says gold and silver bottom lines. This is his bottom line. As long as silver is above the 200-day moving average and gold is above the 100-day moving average, then be long. If this is about relief for China, whether it be stimulus or tariff relief, silver is a buy relative to gold. If Trump comes out and says the WAPO story is BS, we will reverse. I'm just going to say this. None of those things, to me, is why I'm in gold or silver. None. So this is, I don't know if it's a red herring or whatever you want to call those things where they make up a couple of things and talk about it. So the technicals, I think, I wouldn't worry about the technicals as much. Remember, I'm a hybrid investor. Fundamentals and technicals. What I would look at is if we're in an increasing interest rate environment, irrespective of where we're located to these arbitrary 100-day moving average and 200-day moving average, I would be long in gold, silver, platinum, and palladium even. I would be long precious metals as long as the interest rates continue to go higher. If we get a short-term pullback in interest rates, We call that a cyclical pullback. If we get a cyclical pullback in the short term, I think gold and silver will run higher. But what viable options are there for large, copious amounts of money to go into bonds when interest rates continue to go higher? They can't, because bonds will lose money. So people are focusing on the short term here. I would not do that. I would focus on the bigger picture, longer term view. If money is rotating out of bonds, it has to go into something. And if interest rates continue to go up, that pressure is going to continue to be on bonds to sell off. So I would be long gold, silver, platinum, commodities in general, even as interest rates continue to go up on a longer secular bull market. The cyclical, which is secular, means like 10, 15, 20, 30 years. We just exited a secular downtrend in interest rates, which means that money is going to be flowing differently in the market away from bonds, not to bonds. And that money is going to find itself in gold and silver. So irrespective of people looking at a 100-day and a 200-day moving average, you're not taking a long enough time frame, in my opinion. I would stay long as interest rates are in an uptrend, which they are, and interest rates very well could pull back in the short term. But that's not a secular pullback. It's a cyclical pullback, a year or something like that in length, versus the big, longer term, big picture bottom that we got in yields. So everyone is so worried about the short term that I think the big picture view eludes them. And I think silver, with the 45-year cup and handle chart, it's going to go way up. It's going to be one of the best investments over the next decade or so. Bar none, probably the best risk reward in the market in terms of asymmetry versus risk. Reward versus risk and your asymmetry in it. It's probably bar none the best. Now, I'm not talking about equities. I'm talking about the physical metal itself. Gold's going to be really good, and same with platinum. Not Jerome Powell. So this person writes, the Fed printed 7 trillion in a year, and now everyone is shocked about inflation. I'm going to say this, guys, and I don't know if you understand the situation. We have to print money. It is part of the design of the system. There is no not printing money, because what happens is that there's more interest payments in the system than base money in existence. Does that make sense to everyone? There is more interest. So if you were to add up the base and interest payments in the system in total, that equals more than there is currency in the system. So what they need to do in order for the system to maintain itself, to not collapse under the interest payments of the debt, they must pump the system with ever greater quantities of cash. Period. So when a dollar gets loaned into existence, there is an interest payment on that loaning. It gets loaned into existence. So if you loan a dollar, you have to pay back a dollar, at 1.05, let's say, a 5% interest rate. You have to pay 5 cents on that dollar. Where does the 5 cents come from if only $1 was loaned into existence? It doesn't exist. So what happens is they have to continually loan more money into existence because the base amount has to cover somehow the interest payments. And you can never pay it back. It is impossible. So the system and the way the system is designed is corrupt and unethical by the design of the system. And what happens is a bank issues that money at interest from a blank checkbook. And then those that take loans out in the system cannot pay it all back. Not everyone in the system can pay back their loans. So it ends up going back to a bank, and technically they didn't put up the correct collateral for it, in my opinion. But the way that the system is designed, it's an unethical an unethical thing, because all of the assets that have loans against it will eventually end up back at the bank, and they didn't put up correct collateral for it. In my opinion, they didn't, which is just book entries and creating money from nothing. Miner deck, 10 yearly drilling highlights. So it looks like Stellar and Aloro are looking pretty solid there in their tin intercepts, or tin. I don't follow tin that closely, but there is these two. Moving down into guy, BNN Eric Nuttall. The topics of Trudeau resigning, Canadian oil sands companies generally, Canadian energy companies that viciously sold off in December, and Canadian natural gas companies. We remain very optimistic in 2025 for Canadian energy, for Eric Nuttall. Now, I look at the big picture view on oil and I just shake my head. I'm like, what's going on here? We've got a cheap ratio of oil to gold. We've got very low inventory levels that we saw up above. And I just shake my head like, dude, these setups are ridiculous. They are ridiculous. I go and I look at the technical charts of the equities versus oil. I just shake my head like, dude, this is ridiculous. Is it as cheap as 2020? No, it's not as cheap as 2020. But I do think that this is a great opportunity for those that are paying attention. FRO, which is Frontline, 5 pricing opportunities post-COVID, which means it's less than 1 times NAV, net asset value. After this, pricing has consistently moved to 1.5 times net asset value within 6 months. A 6th opportunity post-COVID now. We're now at the lowest pricing in 10 years on this metric. Just wanted to put it out there. And this is the net asset value. So they add up all of the assets that the company has, and then they look at the price of the company. So think of this as market cap versus your asset value, your net asset value. And right now you can buy it below 1, which has happened a few times in history. And it was generally a great buying opportunity for those that had done that. Bullish trend, already time to buy energy stocks ahead of the spring rally. Well, January does get a little bit of, I'll say a little bit of volatility here. The big move is really March into June. That's the big move. And then we get another large move from August up to December. So seasonality, yeah, it's coming. Do I worry about seasonality? Do I take this into account? I don't. I can give two craps about seasonality, to be honest. What I care about is oil cheap in relationship to everything else? If the answer is yes, then I go look at inventory. Is inventory high or low? It's really low. That's a disconnect. How can you be as cheap as we are with low inventory levels? Oh, we've got spare capacity. Okay, let's see what happens here. How much spare capacity? Some people say 6 million barrels. I don't think we have 6 million. I think we have more like 4 million. Steve Hankey says the U.S. Bitcoin strategic reserve is a stupid idea. Savings funneled into Bitcoin aren't building factories, creating jobs, or driving innovation. I mean, yeah, that is a true statement. I mean, yeah. The only thing to say about Bitcoin is I just think it's a crappy design, and I think that people are too focused on price movements and not enough focused on the actual design problems with Bitcoin. The problem, I'll just name off a couple. All dead Bitcoin will end up in all dead people's accounts, and it won't be transacted at all. Also, the mining fees, they were subsidized by Bitcoin itself, so they would mine and they'd get subsidies by coins. As the halvings keep going, the mining costs are going to go up rapidly. And the energy expended per Bitcoin now is ludicrous. I mean, ludicrous. The best thing that we could do is get rid of Bitcoin because of so much of the energy consumption that it has in terms of mining a single Bitcoin now. And when I mean, we're talking about, can't remember the exact amount. It's something like each Bitcoin is like, a large amount of energy. We're not talking about small amounts. We're talking about like powering homes for years, and not just a single house, like many homes. It is ridiculous. And eventually, when the subsidies go down, the processing fees are going to eat up the 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 transaction costs, and then eventually you'll have a price that freezes indefinitely because the processing fees or the transaction costs will be far too costly to transact given the price of Bitcoin. That's what my eventual idea of where that will eventually go. Unusual Whale says there's now a 40% chance the Fed will pivot back to hiking rates again next year per Apollo Global Management. And that's that unsureness around interest rates. Are we going to continue to go up? Are we going to pull on back? Um, Trump says we're Trump says we're going lower on rates. He says, "Oh, we're gonna lower interest rates." It's like, okay, what's this all going to look like? I think a lot of people are confused. Some people say rates are going to go up. Some people say rates are going to go down. I'm in the camp that states I have no idea, absolutely no idea, and I don't think any of these other people have any idea either. That's what I think. China is doing great. So as something is brewing in the HY real estate market, China HY real estate total return index, guys, they just went through a big recession and a demographic cliff. This was seen 30 years ago because your first time home buyers are around 30 something years old. Then you just look around, you look and you see, where the demographic basically goes off a cliff and then this occurs. Now, the better question is, how the heck are they going to recover from this? Who's going to be buying this real estate? If your demographic is declining, there's no one behind it to buy it. Now, could this be a double bottom where things start to flatline? It could be, but that's the problem. So historically, too, generally, if your demographic is good, this is a good time to buy technology. The only thing that makes this a little bit weird is their demographic continues to decline. They're going to struggle to create inflation. It's going to be very similar to Japan because of the demographic. And look at this thing went up multiple times in like rising wedges too, and then eventually just pooped all the way back to the crisis back in 2008 and 9. Ick. Peter Schiff says commodity prices are surging with the CRB index hitting its highest level in 14 years, up 28% in the last 7 months. Do you believe Powell, who claims inflation's headed down to 2%, for soaring commodity prices and rising bond yields? Which evidence is headed much higher? So I don't know what they're trying to do with the interest rates in terms of them lowering interest rates. They're stuck in a hard place. There's no solution here. It's all predicaments. Predicaments is where you handle outcomes. So when you handle the outcome, do they lower interest rates for the economy? Do they raise interest rates because they have to continue to print money for the design of the system? I don't know. Now, what am I doing? I'm playing that inflation's coming. That's it. Inflation's coming, and hard assets do the best in inflation. So, do I try to time the short term? I don't. There's no reason to. As long as they're printing money, it'll come. It'll come. People are going to need. They're going to need crap. Period. They're going to need oil. They're going to need metals. They're going to need base metals and all this stuff. Now, if the economy struggles, we're going to get a stagflation type of environment. That's when gold and silver just go ballistic. But I've got big weightings to that for that particular setup. Art Berman says tight oil and deep water oil sands account for 22% of the world crude and condensate. All world oil production growth since 2010 has been because of tight oil. And here's tight oil, and you can see the big growth in tight oil here. This is deep water and oil sands in the middle, which has been pretty steady. And then conventional, yeah, it's screwed. Conventional's coming on down. I think it probably peaked back in 2000, I don't know when. Maybe we had a peak in 2016, but it looks like it's pretty flat in conventional, and it's rolling over for sure. This is far higher than where it is down here. So, you know, here's the tough part, guys. If tight shale oil, if that is peaking, that's where my concern is. I mean, we are dependent on oil. It's in everything. And I don't want to make money from oil necessarily, but I don't know where other stuff's going to come from. Like this could get real tight and be a complete game changer for the entire world for a period of time. And it may last till oil completely depletes. I don't know, but we're at 80.8 million barrels. It was 82.9 in March of 2024. This is going to get dicey, guys. It's going to get real dicey. The USD CAD will be a must-watch charting this week with Trudeau announcing his resignation as prime minister. This is Hedgehog Trader. Has the Canadian dollar finally bottomed versus the US dollar? If so, an extraordinarily powerful commodity rally is on its way. That is true. Hard assets, gold, silver, copper, lithium, battery metals, uranium, crypto, all that stuff could go way up. He's looking at the lows here, and then what he's looking at are these RSI oversold areas. Gold moving on higher when this moved on up, and really what we're charting is just a weaker dollar. Another way that you can get a weaker dollar is if other currencies strengthen against it. So is this a bottom? I don't know. I'd be watching it though. I'd be watching the Brazilian real and the Canadian dollar and the Australian dollar and all those things. And that will determine money flows. As the dollar weakens, money will flow into precious metals, commodities, and these currencies, the stock markets of these currencies as they go up. Steve Jobs says deciding what not to do is as important as deciding what to do, is a quote there. Here's a Grady one. This is another ratio. He says this ratio chart talks about a huge trend reversal for gold miners versus the leading stock tech sector 9 months ago. Global capital flows are changing, which is tied to this currencies. Global capital flows are changing. Historical sector rotation is coming. Classic possible purple inverse head and shoulder pattern forming with the right shoulder as a back test. So shoulder, head, and then a shoulder potentially, and then we're going to go higher. Now here's the tough part for everyone. To get the best possible price, you should be buying the gold miners now. Don't wait. You have to get it when nobody's looking. You have to buy it when everybody hates it. And then the capital rotation, we've already broken the declining wedge to the upside. We're just doing a back test here. That's a buy point. Here's another one. It says gold has resumed its bull market. Silver is in catch-up mode. Gold miners have turned up versus the tech sector. Commodities are in what will be the greatest bull ever seen. The monetary system is failing, and it's failing fast. The debt cycle is ending. Make sure you make the most of it. For heaven's sakes, do not miss this historical bull market. We've got a breakout in gold, and it's going to rip. His opinion is the third bull move, which will kill the present global monetary system, is underway. So what does that mean? What do you mean? What do you mean by killing? He means that this paper currency system that we are in will die because we have too much debt, and the debt is expanding faster than GDP. And if we hit any sort of oil problem here, where they can't increase the debt because your energy source can't grow, which is AKA your GDP. So in order for the debt to balance out with GDP, you need exponential more energy growth. And that's where gold's going to take it's going to come into effect, because if people start to worry about our currency, which then means you have a bond market crisis. So bonds will have a crisis, your dollar will go down, and people are going to run into wealth preservation. where they're gonna try to store their wealth in gold and silver and platinum and all these other things. Whatever's a hard asset. Now, I don't know how crypto is going to do in that. Some people think that crypto is going to rip. Um, I don't know. I don't know what that looks like. I can tell you this: nobody wants Bitcoin. They want what Bitcoin can buy. That's what they want. So I'm going to buy the stuff that people want to buy. 95% of long-term investing is doing nothing. After you buy, do nothing. Be patient. I would say it's not 95%. It's 99.99% of the time you do nothing. Buying is easy. You buy it, you get in, and then you sit there and do nothing. That's all it is. The uranium stock is on the verge of a significant breakout compared to the Sprothless uranium. Yeah, this thing's just underneath resistance, ready to rip. It is. It is. But that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special coupon code. Still active, but not for much longer. You better get on it if you want to join. And we've got a Sunday question and answer session coming up. So that's all I've got for today. We'll catch you next time, guys. See ya.